Welcome to episode number 7 of Turning $100 into $1 million, the series where I risk a whopping $100 of my own money in an attempt to turn it into $1 million for your sake, for your entertainment. We're going to be doing some position updates, getting rid of these positions in the near future when the market opens next week, and we'll take a look at the stock that I received, the free stock, and if you'd like to receive some free stocks, and many of them for that matter, you could sign up for Webull. My link will be down below in the description. You can sign up there and you'll receive a stock valued up to $1,400 potentially. So the free stock that I received, as you know, and if you haven't seen the last episode, that will be in the description down below as well, was Viacom CBS, or ticker symbol VIAC. And that position is now in my portfolio. And like I said, the estimated value of that position was to be about $12 and change when I first requested or was told that I was going to be receiving that free stock. But now not only is the value much greater than what it was originally, but now it's also gone up even more so. So now if you take a look, the price of Viacom, what it closed at on April 17th, closed at $15.80, up 8% on Friday. And that stock is looking very good and looking like I might have a nice bit of a bounce back to its normal territory where it was trading in between the 40s, 50s, and even as high as the 60s. So we could potentially see, like I said, it could potentially double, maybe even triple. The market went up about 3%, just about, on Friday on the close. Went up over 704 points, about 705 points, with a nice rally there. And if you look at the 5-day chart for the Dow, it's looking good. 1 month coming out of that bearish territory. It seems to be that the bear market is potentially over. I will be making a video in the near future talking about whether or not we have exited the bear market or not, and my thoughts on if we could potentially see some more drops. I will let you know when that video is coming out. It will be very soon. Back to my positions, we have ABR here. Had a nice day. That's a 5-day, a little bit down, but on the 1 day, it looked very good on Friday. And so we are seeing those higher highs with this, so that's looking good. And on OXLC, the other position, 5 days, 1 year, again, those higher highs. So as far as what I'm at now, unrealized profits or losses, we are at up over 4% on VIC ever since it was added into my portfolio. So that's a nice freebie. And OXLC, we are down a little bit still. That can easily reverse. And ABR, we are still up, touching about 1% gain on there. Account value, bear in mind that is with that free stock, so it's not all gains necessarily. But you could include it in there if you think it is. You could include that free stock into my portfolio gains. It's up to you. I'm not going to say one way or the other. And the net value is 116.02, and we're up 0.71% and 82 cents. Now, one thing I was asked about is whether or not you should short stocks for the long term, whether it be for long-term investing or if you're trying to do a swing trade, anything of that matter. Someone asked me if you should try to do shorts, and the answer with that is that it's extremely risky. The reason why shorting a stock long term is so risky is because when you buy a stock, the most you can lose is the value of that stock. So let's say you bought 5 shares of a company at $20 a share, that's $100. The most you can lose is $100, even if the stock went to zero. It might not go to zero necessarily, so there's a very slim chance that you would lose the entire $100, but the most you could possibly lose is that $100. However, with shorting, you can lose an infinite amount of money. With short selling a stock, you don't want to hold that long term because that stock can go up to an infinite number, which means you can lose technically an infinite number of dollars. If you're shorting a stock at $5 and it goes up to $100, you just lost a lot more than you invested. So if you are doing shorting and you are that kind of trader, then you're probably not going to hold that more than overnight. And you don't want a margin call, or nowadays it's mostly digital, but basically that means that your broker is calling you, asking you for money that you are indebted to. For example, I was looking at AMC actually. I was thinking about AMC Theaters, the movie theater company, and there's talk that they might file for bankruptcy very soon because they're losing so much revenue. And I was very close to doing a short on this, and that would have been a long term. It wouldn't have been a short term either, possibly holding it for weeks or months on end. And I was thinking about shorting it, around like $2 and change. It was definitely something I was considering. I was very close to doing this, but I was just thinking, you just never know. you could lose a lot of money. You just don't know, especially in these times. It's so much uncertainty that you truly don't know what could happen. And lo and behold, the stock ended up going up. I would have lost a chunk of money that would have made that net account value not $100, I'll tell you that much. It would have been a lot less. So on just Friday alone, when the market closed, it shot up 31.15%. So you just never know. You can see that spike there, and I was really considering shorting it around this territory over here. So you just don't want to hold those shorts. That's extremely risky, and I would not recommend doing it. If you are looking to short stocks, it should be a small trade. It should be something that you can afford to lose a lot of money. It should be something that's within a day, 2 days maximum, but you do not want to hold that short for a long period of time, because something like this could definitely happen. Now, I'm not saying that AMC could go back down. It's possible they could file for bankruptcy, but trading could be very emotional, and when you are at this point, what your emotions would be. It's very easy to do it from a bird's eye view and hindsight. Oh, I would have just sold, before that happened, or bought to cover in this scenario. When you're in the position, it's a much different situation. So you just never know, and I would not recommend shorting a stock long term. I was also looking at this stock right here, ticker symbol PLAY, or Play, which is Dave & Buster's. For those of you who don't know what Dave & Buster's is, if it's not in your area, essentially a restaurant and arcade. And it does pay a pretty good dividend. That's a pretty hefty dividend. And before the drop, it was trading anywhere between like $39 to as high as $46, and then it had that drop. And of course, that's because of stay-at-home orders, non-essential businesses having to shut down, things of that nature. So I might want to look into this with my holdings. If I sell them, put that money into this. So this is something I'm looking at, I'm watching. 5-day chart is still down, but we are seeing, as most stock patterns will have the same pattern, that we are starting to see those higher highs. But for Dave & Buster's, a little bit of a consolidation there. So we shall see, but this is something I'm considering, just to let you know. But that is it for episode number 7 of turning $100 into $1 million. If you enjoyed that video, be sure to give it a big thumbs up, smash the like button, and subscribe so you don't miss any future videos or episodes. The entire playlist for all of the episodes for this series will be on my homepage. You can check that out. Sit back, relax, click the play button, and just let that playlist roll. Thank you for watching, and looking forward to seeing you in the next video.